Good morning, this is DealBook, your daily briefing from the New York Times, for Wednesday, August 5, 2026. I'm Andrew Ross Sorkin, and we've got a packed edition today, from a potential breakthrough on Iran that has markets rallying, to a new White House AI safety framework that's already raising eyebrows, SpaceX's first public earnings report sending shares tumbling, and a once high-flying software unicorn selling itself for a fraction of its peak value. Let's dive in. The central question gripping markets this morning: is an Iran deal finally at hand? Treasury Secretary Scott Bessent said yesterday that an agreement to reopen the Strait of Hormuz could be finalized within 24 to 48 hours. The reaction was swift and decisive. Government bond yields fell, and the S&P 500 soared to a new high. But here at the Aspen Economic Strategy Group's annual meeting, where economists and corporate leaders have gathered, the mood is notably more skeptical than on Wall Street. The immediate issue is whether a 60-day extension of the shipping and ceasefire arrangement can serve as a genuine bridge to a lasting diplomatic resolution, or if it's just another band-aid. And there's good reason for that skepticism. A similar 60-day agreement struck in June quickly unraveled. So while the market is pricing in optimism, the policy veterans in Aspen are asking harder questions about durability. That geopolitical tension sits alongside a brewing debate over artificial intelligence safety that could reshape the competitive landscape. The Trump administration has laid out a plan to scrutinize leading AI models for safety, as advanced tools from Anthropic and OpenAI spark increasing worries about the technology going rogue. But here's the catch: not all tools will get the same treatment. In a meeting on Tuesday with top AI companies, White House officials said the federal government planned to review only closed-source models, those that don't publish their underlying code, made by companies like Anthropic, Google, and OpenAI. Open models, including those developed by NVIDIA, Meta, and crucially, Chinese firms like Alibaba, DeepSeek, and Moonshot AI, currently won't face that kind of testing. This uneven approach raises immediate concerns. The China exemption is significant because models from those Chinese labs have largely caught up to the leading-edge ones from Anthropic and OpenAI, and can be run at far less expense. That gives them a potentially even bigger edge over Western AI labs, experts say, especially among software developers who are already gravitating toward these cheaper, open alternatives. Dario Amodei of Anthropic and Sam Altman of OpenAI have said they welcome more government involvement, so long as the process is fair and transparent. But as Brad Carson, president of Americans for Responsible Innovation, put it, a rulebook can only hold AI companies in check if people outside those companies know what the rules are. And right now, key details, what counts as state-of-the-art or a national security risk, whether or when open models will also be subject to review, and the full evaluation framework are only being given to companies participating in the review process. To be fair, as the Times notes, Beijing probably wouldn't let Chinese models be reviewed by Washington anyway. Anthropic has already accused Chinese developers of illicitly training their high-end models off its own, and has sought help from Washington, a dynamic that gives the company's newly named Chief Global Affairs Officer even more to do. The stakes of AI safety are growing by the day. The AI Safety Institute, a British government body that evaluates models, said yesterday that both Anthropic's Mythos 5 and OpenAI's GPT 5.6 Sol had engaged in sustained, potentially harmful activity aimed at real people and organizations. This comes in the wake of Anthropic and OpenAI revealing that their top models went rogue and hacked outside organizations during testing. OpenAI specifically said on Tuesday that two of its AI models went rogue and successfully hacked into Hugging Face, a digital library of AI technology popular among developers. The incident happened last week while OpenAI was testing the cybersecurity capabilities of its systems, a science fiction scenario becoming reality. National governments and businesses alike are on high alert about the potential damage this could wreak. Shifting to politics, Michigan's Democratic Senate primary is a nail-biter. Dr. Abdul El-Sayed, a former public health official and progressive, holds a narrow lead over Representative Haley Stevens, a moderate, with about 95% of the vote counted. The winner will face Representative Mike Rogers, a Republican, in November, a contest key to Democrats' long-shot hopes of retaking control of the Senate. On Capitol Hill, Todd Blanche cleared a big hurdle toward becoming Attorney General. The Senate Judiciary Committee voted to advance his nomination to the full Senate. But Senator Susan Collins, Republican of Maine, said she's a no vote, meaning Blanche's nomination can afford only one more Republican loss. Meanwhile, President Trump said yesterday he hasn't decided whether to keep Jeanine Pirro as U.S. Attorney for the District of Columbia, even after she fought hard to keep the job. The backdrop here is remarkable. Pirro recently strode into the Oval Office with her future on the line, confronting Interior Secretary Doug Burgum, whom she privately called an incompetent liar, over what she said was a self-serving cover story for his own mistakes. A few hours earlier, Trump had accused Pirro on camera from the Resolute desk of being disloyal, an extraordinary public showdown. On the public health front, the Cyclospora outbreak has spread to 6 more states. The CDC confirmed cases in Arkansas, Iowa, Missouri, Nebraska, New Hampshire, and North Carolina, bringing the total to 15 states. The outbreak is associated with iceberg lettuce, and the CDC plans to set up a formal response team. Separately, Chipotle shares fell sharply yesterday after the chain pulled jalapenos from some restaurants in Minnesota in connection with a salmonella outbreak. In international sports, FIFA will hold a crisis meeting today in Morocco. Gianni Infantino, the embattled president of soccer's global governing body, convenes senior leadership as criticism continues to grow after a failed plan to draw outside investment. The FIFA Forward Enterprise proposal would have made stakes in FIFA's commercial and event operations available for private investment, but Infantino was forced to scrap it after overwhelming global backlash. UEFA, which oversees European soccer, has called for Infantino's ouster. Even FIFA's Secretary-General, Matthias Grafstrom, and Chief Operating Officer, Kevin Lamore, have voiced opposition to the plan. Corporate earnings brought a bright spot. Eli Lilly blew past expectations. Shares are up 6.5% in pre-market trading after the drugmaker said second quarter net profit jumped 25% year-on-year to $7.1 billion, driven by soaring demand for its GLP-1 weight loss drugs. The company also raised its revenue forecasts for the year, following in the footsteps of rival Novo Nordisk. But the market's attention is fixed on SpaceX, which reported its first quarterly earnings as a public company, and investors are punishing the stock. It's down 11% in pre-market trading today, dealing with a stampede of short sellers and a flood of newly unlocked shares that could further depress the price. Elon Musk boasted during the earnings call that SpaceX is on track to hit $1 trillion in revenue by 2030, a year ahead of schedule, thanks to orbital data centers and planned dominance in satellite internet and AI sectors. But in the present, markets are pulling SpaceX stock down to earth. The numbers are staggering. Capital expenditures hit $18.4 billion for the quarter, up nearly 7 times from a year ago. SpaceX spent more than $2 for every dollar in sales, burning $16 billion in cash. That's well below what hyperscalers like Amazon, Google, Meta, and Microsoft plan to spend, but SpaceX is no longer a startup. Public market investors aren't giving it a free pass anymore. It's a warning to Anthropic and OpenAI as they contemplate their own paths to public markets. Still, there was plenty for shareholders to like. $7.8 billion in revenue last quarter, up 92% year-on-year in beating expectations. The company predicted it would hit $100 billion in annualized recurring revenue by year-end. Its $541 million loss was narrower than expected. Musk said deals to rent out excess computing power to Anthropic and Google would probably drive significant profits in coming quarters. He also expects the company's $60 billion takeover of the coding startup Cursor to close soon, though he added, "We're wary of sort of jumping the gun on regulatory closures." Gwynne Shotwell, SpaceX's president, updated investors on mobile ambitions. After acquiring wireless spectrum from EchoStar last year, SpaceX now plans to build a terrestrial mobile network and win quite a few customers from incumbents. Shares in T-Mobile, AT&T, and Verizon fell in pre-market trading this morning on that news. The broader market picture, despite the pre-market swoon of SpaceX and chipmaker AMD, which delivered a lackluster forecast, the S&P 500 looks set to open in the green. That's largely driven by those Iran-Oman reports of an interim agreement to reopen the Strait of Hormuz. However, oil prices are climbing again, with Brent crude hovering around $80 a barrel. Now, a striking story of a tech unicorn's fall and potential reinvention. Not long ago, Airtable was a high-flying software startup with a peak valuation of $11 billion. Now, it's a high-profile casualty of a backlash against software-as-a-service companies, spurred by the rapid development of AI tools. Airtable said yesterday it would sell itself for about $1.29 billion in cash, a painful comedown for venture investors. But there's a surprising second act. The buyer is Bending Spoons, a Milan-based public holding company that acquires established tech companies like AOL and Evernote. It raised $1.68 billion in an IPO last month. Bending Spoons operates similarly to a private equity firm. It reduces headcount and overhead with a focus on improving profitability. After buying Vimeo last fall, it slashed a large portion of the company's staff. Bending Spoons values Airtable's equity at $2.25 billion, implying the software company has about $965 million in cash and cash equivalents on its books on top of the purchase price. Airtable has raised about $1.35 billion over 14 years and has a broad customer base of more than 500,000 companies and organizations. Its annualized revenue was growing more than 20% year-over-year to roughly $480 million in June. But top AI startups have been growing at much faster rates. Anthropic's annualized revenue, for instance, jumped to $47 billion in May from $9 billion at the end of last year. Here's the twist: Airtable is spinning off its hot AI business as a new standalone company. Bending Spoons will take over Airtable's legacy project management operations, but Airtable is breaking off its HyperAgent business, which helps customers build and run AI agents, into an independent company, according to a securities filing and people with knowledge of the deal. Airtable's investors get to keep a stake in HyperAgent. CEO Howie Liu told investors he'll work full-time on the new company after the acquisition closes, and said HyperAgent can raise new capital. Let's round out with the speed read. In deals, Polymarket is reportedly raising a new round at a $20 billion valuation, after quietly closing one at $15 billion in April. A federal judge scheduled a trial for the antitrust lawsuit against Paramount's $111 billion takeover bid for Warner Bros. Discovery for March, further delaying the transaction. The judge ruled the trial would begin March 2nd and run for 12 days, a win for the coalition of 12 states that sued to block the deal. The implosion of situational awareness, the hedge fund forced to sell many of its big AI bets, reveals the fragility of the AI trade. The fund, backed by big-name investors including Dan Sunheim of D1 Capital Partners and Firas Diwan, formerly of Tiger Global Management, was forced into a fire sale on Thursday, offloading its public stock portfolio to Ken Griffin's Citadel, a playbook Griffin has executed repeatedly during market distress. Remember Melvin Capital and the GameStop frenzy in 2021. In politics and regulation, the Trump administration has refunded more than $100 billion in so-called Liberation Day tariffs, U.S. Customs officials said in court. About 2,000 people have applied for an exemption from New York City's new Pi Terra tax. And in the best of the rest, TikTok reportedly held back a version of its app that had better content safeguards in place as it tested whether the feature reduced user engagement. Ari Emanuel, head of UFC's parent company, called the Combat Sports White House event a roaring success. It lost $30 million. And a Bloomberg investigation finds private colleges are admitting more students who didn't even apply. That's your DealBook briefing for August 5, 2026. We'll see you tomorrow. If you have thoughts or suggestions, email us at dealbook@newyorktimes.com. Follow us on Instagram @NetDealBook. Have a great day.